you know, I can't help but laugh when I think about this stock. Because the stock market right now, the bear market is so dog shit. Everything's doing so bad. And you hear about hedges against inflation, hedges against the bear market. Like Bitcoin's been a talk for a long time, and gold and silver and precious metals and all of these different things. But we have Redbox happening right now. And I can't help but laugh at this because Redbox is basically a dead business model. They're a DVD rental company that has gone from $1.60 to a high of about $14. Dead companies are the best hedge against inflation in the bear market, I guess. Guys, welcome back to Trey's Trades, where we freaking talk fast and don't skip class. I like to preface by saying I'm not a financial advisor or expert, so take it with a grain of salt. Let's get into it today. As you can see by the title of the video, I'd like to talk about Redbox. Redbox has been nutty for some time now. It's gotten absolutely crazy, and I'd like to talk about sort of the data behind this and what's sort of happening, because it's actually in a pretty interesting spot when push comes to shove. Redbox is a DVD rental DVD movie rental company, whatever you'd like to say. Sort of like the opposite of AMC, of movie theaters, so to speak. That's had a business model that's sort of been failing. It hasn't been doing great. There's those by the name, by the way, red boxes that'll be outside of different brick and mortar locations where you can put in some cash, rent a DVD, and you return it back to the red box later. Well, for some reason, streaming seems to have killed this, or movie theaters. I don't know. It could be one or the other. It could be both. But nonetheless, they've been a struggling company and have the data to show that there's a lot of short sellers that think so as well. If you were to look at the short interest, I've looked at this before. I've looked at it again. Show it again. You have 226.97% current short interest of free float. High cost to borrow, 832% cost to borrow, 100% utilization. High free float on loan. The numbers here and the metrics here are absolutely insane. And what this really is telling me is there's a massive amount of short sellers out there who were betting they would go bankrupt, that this company would go bankrupt. And now it's got some attention, some volume, some eyeballs. Redbox is kind of punishing some of these short sellers. And these short sellers think their goddamn souls are providing a beautiful hedge for inflation and for a bear market for the time being. You can see the short interest line right here. It's this gold trend line. Ortex estimated short interest free float has gone up continuously for a long time now. It's been since November 25th of 2021. You've seen it go from 1%, really only up. It's only ever really gone up. 33, 33, 40, 37, 42, 50. And up here, you're already at 54%. Now you're at 148. Dropped down to about 125, 167. To where it is now, which is 223 or 226% short interest of free float. An exponentially high number with an exponentially high cost to borrow. But beyond that, there's more to the story. There's more to what's happening here with Redbox that I find to be of interest. And it is this oh so spooky failure to deliver metric. If you were to look at this, a failure to deliver, in case you did not know before, is when a market maker essentially owes stock, right? It's exactly like the name sounds like. When you fail to deliver on stock, you have on your books something called a failure to deliver, which states, I will eventually deliver on X amount of shares that I have not delivered on in the past. I actually pulled this up just because I wanted to fact check Ortex on it. This is coming directly from the SEC's website. They report these numbers every couple of weeks, right? This is sort of the early May, first 2 weeks of May numbers for Redbox failure to delivers. And what you'll see is it's at 1.302 million, which lines up pretty much square on the nose with what Ortex has reported here on that failure to deliver metric at 1.3 million total failure to delivers. Well, this is problematic. This is problematic for a stock that's a super low float, that's got a very high current short interest of free float, 226%. Because if you were to look at sort of the free float on loan that exists for this stock, you can see 12.62 million shares outstanding and 1.95 million share free float. I've also seen different metrics, right? So take this with a grain of salt, with speculation. I genuinely don't know which free float on loan is the correct one. This is what Ortex reports. But nonetheless, the failure to deliver metrics are must-buy shares. They provide buying pressure. They are a demand that must be delivered upon. And when it is delivered upon, you typically see a nice move up. Now, this is from beginning May, first week of May to mid-May. The 13th of May is the last day that we can say we saw data for this sort of thing. So there is a probability and the possibility that some of these shares have been delivered on, which is why you've seen sort of this huge move up. But you can see that the short interest continues to climb nonetheless. And this is a metric that is, of course, estimated. And of course, you got to have, weigh it out both ways because it is an estimation, which is why you have the confidence interval, so to speak. But nonetheless, there's very obviously a narrative here. There's very obviously some shorts that are going to be underwater if this continues to go the way that it has. And I want to show you this on loan average days. What you're going to find is that the average day that one of these shares has been on loan is 34.81 days, which spans back to some pretty low numbers. These guys are underwater by, at this point, hundreds and hundreds of percentages. And with a float this low, you can really see some massive damage be done. Now, I want to say one thing very clearly. I have no position in Redbox because it is too low of a float. I don't want to dabble with this. I would not feel good about it. Right? That's just me. That's my personal thing. If you'd like to dabble in it, you do you. Secondly, if you're going to buy Redbox now, right? Note this, and I'm not pressuring you either way. I've got no dog in the fight. You are late. And if you are late to the party, that means two things. It means that you have more inherent risk and that you will not make as much money. Accept both of these things if you buy Redbox at $13 instead of buying it at $2 or $1.50 or $4 or $5, because those people were rewarded for having conviction. They were rewarded for being early. Myself personally, I'll admit, I didn't think you'd see a move like this. I really didn't. It's had a lot of strength and has acted as the perfect sort of joke, the perfect sort of hedge against inflation for a company that's really been struggling with their business model. So it's great to see. I wanted to pull up the charts and show you sort of what we have working out right now. And what you're going to find is it's following a pretty distinct pattern. And I'd sort of label this as like an expanding megaphone. So what you've got here is a rising resistance line and a rising support line. And it's sort of just ping-ponging back and forth between both of these lines. And right now it's working its way up to sort of this top peak. And it's just tapped on this fib level. Now I've got this fib level drawn up as well because if this does hit a new all-time high, Redbox, I think that it's got very similar metrics to GameStop way back in December or November of 2020 when it had massive failure to delivers and massive short interest. Look, I'm the messenger. I'm looking at data. I'm just looking at things as they're pitched, how they look. And what you can see here is a massive amount of failure to delivers, crazy amount of failure to delivers, to be frank with you. 1.3 million for a low float stock like this makes a big impact. And who knows what they're going to be later. Could be higher, could be lower, but these are things that you can watch over. High short interest, high cost to borrow. And furthermore, high amounts of option and gamma activity. There is certainly a gamma ramping taking place here. And as that continues to sort of ramp up, I think you can see some real damage being done here. So it looks pretty crazy. I really think it does. And I think the fib level could be an inclination and an indication of where this could go if things went absolutely perfect and it moved like you wouldn't believe. Now, the highest that it's ever been is $27.35, which would be considered the 1.0 fib level. Then you've got the 1618, 2618, 3618, and 4236. Why are these important? Well, I've mentioned this before. I'll say it again in case you're new here. Robots, algorithms, institutions, banks, all the big players that manage massive amounts of money who I guarantee are certainly playing this. Not all hedge funds are short on this. I guarantee there's some that are long. They determine where things go based on math, based on numbers, based on algorithms. And algorithms run on Fibonacci levels, Fibonacci numbers. So you can actually get a guess and an estimation on where Redbox will go. An example of this is AMC. AMC, if you look back in the June run-up, you can see that it actually stopped right on the 4236, which is a massive amount of strength. Had a beautiful, beautiful run-up, and you could have predicted that, right? I didn't at the time. I certainly didn't, but hindsight being 2020, you can see that fib levels are pretty important. It actually stopped right square on the nutsack, about $1 higher than that 4236. So you fast forward to Redbox. If Redbox has a move that strong, if it can put together some momentum here, and by the way, high volume candle close on Friday, followed by this candle, this green candle with a small topping tail. This is very strong. That does look very strong, and to me, it would sort of give you a hint at continued upside strength. But as I mentioned before, if you're buying now, you're late. So accept more risk and accept you won't make as much money. That is what you must tell yourself and accept if you want to play this. And that's a big piece of why I want to talk about this is risk management. Have a plan, But if things go perfect, with the numbers we see here, 226% of short interest, failure to delivers through the roof. you could see some massive moves. This is something that could really do something pretty damn dirty. And I wanted to take the time to discuss it because this is some wild rehypothecation, wild, to me, fraud. I know that it's legal, quote unquote. You can use failure to delivers, you can use short exempt volume, you can use rehypothecation, you can even naked short sell to some extent, and the SEC won't fucking touch you. But this is an example of the wrong guys getting punished for what they're doing. And to me, I don't know if this is done. The RSI is absolutely cooked on this, so it's going to ebb and flow. Stocks follow patterns, and you can see that the last time that it had a massive ramp up on RSI back here, it retraced the ways and then it came back up. Well, if I had to take a stab at it, it's probably going to follow some similar pattern where it's going to tap up here, probably do a retrace, and then if you're lucky, it comes back up and you continue on with the momentum that you've had. But that's all dependent on the strength of Redbox. Nonetheless, 200+% short interest, massive amount of failure to delivers, good looking chart. I'm sure there's some people out there making money on this, and I wanted to take the time to discuss it here today because it's set up nice. This isn't GameStop. This isn't AMC. No two charts are ever going to do the exact same thing because they're different companies. There's different thesis. There's different this. There's different that. But I haven't seen anything that looks this similar to way back when in some time. At least not by the books, by the data, you know? This is like set up now. When I talk about AMC, I say it's not quite ready yet, right? Doesn't have the cost to borrow we need. Doesn't have the pressure we need, the momentum we need, right? That's all about timeliness. That's about sort of the time that it takes to get to this situation, which is what Redbox had to do, right? Went through a period of about 3 or 4 months to build up to where it is right now. And that's what it took. It took 3 or 4 months to get here, right? And the time looks pretty good. It's set up. It looks like I could do something pretty dirty. And that's what I got. Like I said before, I don't have a position. I'm not going to play it too low of a float for me. Be careful. Have a plan. Manage risk. And make some money. All right? That's what I got for you. Catch y'all later. Much love, taps as always. And peace.